$55,139,225. That is what one chief executive sold out of his own company in a single filing window spread across 38 separate transactions. Meanwhile, the Dow fell 5 times harder than the S&P 500, and volatility went down. Today, we unpack that insider exit, a 66% collapse triggered by a $1 million capital raise and the jobs number that decides tomorrow's tape. Let's start with the scoreboard, because the headline numbers hide the real story. The S&P 500 closed at 7,811.38, down 0.16%. The Nasdaq Composite finished at 26,548.35, down just 0.06%. Essentially flat. But the Dow Jones Industrial Average closed at 53,885.10, down 0.85%. That is more than 5 times the S&P's decline. And when the price-weighted industrial index underperforms the tech-heavy one by that margin, you are not looking at a broad risk-off day. You are looking at a rotation out of cyclical, old economy balance sheets. The sector data confirms it. Basic materials was the worst performer at negative 1.39%. Consumer defensive fell 1.23%. Communication services slipped 0.28%. And the only sector in positive territory was energy, up a modest 0.12%. The prior session's consumer cyclical red was down 1.70%. So, materials, staples, and consumer names sold, energy bid, technology untouched. Now, the tell. The VIX closed at 1515, down 4.17%. Volatility falling on a down day is not fear. That is orderly repositioning. And CNN's Fear and Greed Index sits at 60, firmly in greed territory. Translation: the market took money off the table in specific places without changing its overall risk appetite. Remember that context, because it matters for our first story. Story 1. Robert Mionis, Chief Executive Officer and Director of Celestica, sold 149,514 shares for $55,039,025, dated August 5th, executed across 38 separate transactions. Let's do the math the filing does not do for you. $55.14 million divided by 149,514 shares works out to roughly $368 per share. 2 things stand out. First, the transaction count. 38 fills is not one decisive block trade. That is a methodical, staged liquidation designed to work through the order book without moving the price against the seller. Second, the size. $55 million is exit-sized, not diversification-sized, for a single reporting window. What it means for investors? Insider sales are the noisiest signal in finance because executives sell for taxes, homes, divorces, and preset plans. But magnitude and structure carry information. Celestica has been one of the primary beneficiaries of the artificial intelligence server build-out, and its share price reflects that. When the person with the best possible view of order books, customer concentration, and margin sustainability chooses to convert $55 million of paper into cash at these levels, that is not a sell signal for you. It is a valuation data point. It tells you that from inside the building, today's price adequately compensates for the risk of the next 12 months. Nobody should short a stock on this. Everybody should adjust their assumption about how much upside insiders themselves believe is left. Story 2. The single worst performer on the tape. YXT.com. Group Holding Limited fell 66.07% to $7.95. The catalyst is unusually precise. This morning at 9:15 a.m., the company announced pricing of a registered direct offering of $1.05 million. Read that again. $1 million. That is a rounding error for most listed companies, and it destroyed 2/3 of the equity value. The context makes it worse. On July 31st, the company announced it had regained compliance with the Nasdaq minimum bid price requirement. And on July 10th, it announced an American depositary share ratio change, effective July 14th. So the sequence is a reverse split-style ratio change to fix the bid price, compliance regained, then a dilutive raise priced days later. The market read that as a company raising cash at any price it can get. The lesson for investors is structural. When a microcap engineers its way back into listing compliance and immediately taps the equity market for a trivial dollar amount, the size of the raise tells you about access to capital, not about ambition. Story 3. ThredUp fell 50.48% to $3.11, and it did that on rising revenue. The coverage of the quarter framed it around navigating a K-shaped economy with revenues climbing 17%. So the top line grew, and the stock halved. That combination almost always means one of three things: guidance below expectations, gross margin compression, or a change in the growth versus profitability narrative. 17% revenue growth that produces a 50% drawdown tells you investors had priced in materially more, and that the quality of that growth was questioned on the call. The broader read-through for the resale and value retail complex is that consumer trade down is no longer a surprise thesis. It is consensus, it is in the price, and it now has to be paid for with margin. To the Congress and Insider Corner. On August 5th, disclosures hit for Senator Tommy Tuberville of Alabama, covering trades executed back in 2024. 4 sales: Cleveland Cliffs on May 13th and again on May 10th, and Intel on May 13th and May 10th, each in the $100,000 and $1 to $250,000 bracket. There was also a purchase of Federal Home Loan Mortgage Corporation, dated March 12, 2024, in the same size band. The transaction dates are more than 2 years old, so the trading value is 0. The disclosure lag itself is the story. Corporate insiders were far more current, and the direction was uniform. Alongside Celestica, CoreWeave chief executive Michael Intrator sold 307,692 shares for $28,245,814 on August 4th, roughly $92 a share. CoreWeave's executive vice president of product and engineering, Chen Goldberg, sold $2,442 on August 5th. At CrowdStrike, chief executive George Kurtz sold 20,000 shares for $4,029,965, and director Samir Gandhi sold 20,000 shares for $4,298. Combined, that is over $94 million of selling from artificial intelligence infrastructure and cybersecurity leadership in 2 days. Cluster buys in the data, 0. That asymmetry is the point. On earnings, today was quiet by design. There were no reported prints on the domestic calendar, and the upcoming schedule is dominated by international listings. 2 Korean tickers on August 11th, with earnings per share estimated at 6,639.46. Another Korean name on August 13th estimated at 2,310, and Chile's Copec on August 13th with earnings per share estimated at 200.01 and revenue estimated near $7.8 trillion in local currency. So the earnings signal today came from the analyst desk instead. Truist cut its Somni Group price target to $100 from $115, with shares at $64.87. BTIG cut Shift4 payments to $60 from $70, shares at $43.36. And Alliance Global nudged Redwire up to $16 from $15, against a price of $11.83. Notice the pattern. 2 of 3 targets came down, yet all 3 still imply 35 to 54% upside. Analysts are trimming enthusiasm without abandoning the thesis. What to watch tomorrow? Everything routes through 12:30 GMT and the July employment report. Non-farm payrolls are estimated at 80,000 versus a previous 57,000. That prior print is weak by any standard, so a beat toward 80,000 argues stabilization, while a miss under 60,000 puts labor market deterioration back at the center of the rate debate. The unemployment rate is estimated at 4.2%, unchanged. Average hourly earnings are estimated at 3.5% year over year and 0.3% month over month, both matching prior. And the participation rate is estimated at 61.6% versus 61.5%. Watch that participation line closely, because a rising participation rate with a steady unemployment rate is a genuinely healthy combination, while a falling one flatters the headline for the wrong reasons. With the VIX at 1515 and fear and greed at 60, positioning is not defensively hedged going into this print. That is what makes it dangerous. One last data point from the retail crowd. Hertz drew 1,405 mentions on Reddit, a 10,775% increase, taking the #1 rank ahead of the S&P 500 ETF at 405 mentions. When a single small cap name out mentions the index by 3 to 1, treat it as a crowding warning, not a thesis. Today's theme: insiders selling into strength while volatility fell and the crowd chased. Subscribe for tomorrow's jobs report breakdown.